quest to have you prepared for your retirement, to ensure that you have the right tools to overcome all of those key retirement risks, I figured this is a great time to talk about an emergency fund. I don't know if you know this, but during your working years, the rule of thumb is about 6 months of your salary. But when you're in retirement, the rule of thumb is about 12 months of your living expenses. So let's insert in a pandemic where many people have been unemployed for more than a year. So there goes the rule of thumb. So what I'm going to talk about in this video today is why you need an emergency fund in retirement and how much in reserves is adequate for your emergency fund. So by the end of this video, you'll have a better understanding so that you'll be able to determine for yourself how much you need in an emergency fund in retirement. Hi, my name is Darlene Hartman. I'm a CPA and founder of D. Hartman Consulting, LLC. For the best retirement annuity advice, subscribe to my YouTube channel and hit that notification bell so that you can receive notices anytime I post a new video. Recent research suggests that over 40% of Americans cannot afford an emergency that would cost them $400 or more. So yes, this is a channel on retirement. So why would I mention that statistic? Well, it's because if you're having problems saving for an emergency fund during your working years, how are you going to have an emergency fund in retirement? So an emergency fund is just as vital of a tool as your stocks, bonds, and real estate in your retirement portfolio. Now, I've had several people tell me, well, I have enough in retirement assets. I don't need an emergency fund. And if you think about it, right now, money market funds and savings accounts are returning less than 1%. I mean, we're talking around 0.5% annual rate. So why would you take money out of your productive investments, such as stocks and bonds, and put it into an emergency fund? Well, let's see. So the CPA in me is just going to have to spew out some more numbers, but I think this is one that you're going to want to hear. So recent research stated that long-term care costs for seniors in retirement is averaging about $300,000. So last fall, I reported that statistic at $260,000. That's a pretty big increase in a short amount of time, but it's telling you that those medical costs have been increasing rapidly. So I don't know about you, but I think most people who do have an emergency fund of 12 months of living expenses, that's probably not going to be enough to cover those long-term care expenses. But it's good to have that emergency fund because it at least helps start to fund those long-term care costs. But what if you had a long-term care policy, whether it be a traditional or a hybrid? And just so you know, a fixed indexed annuity does provide a rider for long-term care, and I will provide information in future videos about that rider. But in the meantime, wouldn't that take a lot of pressure off of your emergency fund if you did have some kind of coverage for long-term care? But then we're back to our original question. If you do have a long-term care policy, why do you need an emergency fund? Well, it would be due to a key retirement risk called sequence of return risk, which works hand in hand with market risk. So if you're about to enter retirement or you're already in retirement and a market downturn occurs, then it's going to have an impact on your retirement assets. So first, if you don't have an emergency fund, you're having to sell some of your retirement assets for a loss in order to ensure that you have enough money to pay your living expenses for that year. And then you're also withdrawing money from your retirement portfolio at the same time that you're recording these losses. And that can have a devastating impact on your retirement portfolio, especially if it occurs for more than 1 year, such as the case in 2000, where the market downturns occurred 3 years in a row. So nobody can predict what's going to happen with the market. And your retirement, when you decide to start it, is dependent on your schedule and not the market. So why leave your retirement to chance? Why wouldn't you have an emergency fund so that you can withdraw from your safe emergency fund in the midst of market downturns, and not have to sell assets in your retirement portfolio at a loss. Now back to one of my original questions, is 12 months enough for a reserve in your emergency fund? Leave me a comment in the section below and let me know how much you think you should put aside in an emergency fund during your retirement. Also, if you're enjoying this video, be sure to give me a thumbs up, subscribe to my YouTube channel, and hit that notification bell so that you can receive notices anytime I post a new video. Now back to my question, is 12 months reserve enough for an emergency fund? Well, as you've heard me say many times, one size doesn't fit all, and it's based on your individualized circumstances. But then again, events happen, and that may necessitate more of an emergency fund in one year than another. So it could be a floating amount that should be in your emergency fund. And it seems like a lot of work to keep that emergency fund fully funded for however much you feel like needs to be there, and you don't want to sell investments for a loss in order to replenish your emergency fund. And then again, you don't want to sell your investments too early, because then you're losing out on the potential gain for those investments because you sold them to put the cash into an emergency fund. So is there a way to protect yourself from sequence of return risk and market risk and still earn a return of 1% or more? Well, absolutely. Now, you probably know where I'm headed with this, because this is a channel on retirement annuities. So what if you had a fixed annuity in your retirement portfolio and it provided you enough income month after month to cover your basic living expenses? Wouldn't that take some pressure off of your emergency fund? And think about it. Most fixed annuities are going to provide you a return greater than 1%. Which is much higher than a money market fund, a CD, or even a savings account can provide you. Even multi-year guaranteed annuities provide you higher returns than certificate of deposits for over longer hold periods. So a fixed annuity, one of the big annuity benefits is that guaranteed income that you're going to receive month after month. And it doesn't matter what's going on in the market, you'll continue to receive those payments. And the amount is dependent on the annuity contract and not what's going on in the market. And don't forget about the annuity superpower, which is if it's lifetime income, you're insured that you cannot outlive your money in retirement. So by having a fixed annuity, and if it provides you enough income to cover your basic living expenses in retirement, it not only takes some pressure off your emergency fund, but it also takes a lot of pressure off of your retirement assets, because you're not having to sell those assets at a loss to withdraw money so that you can pay your living expenses. And not that I encourage this, but by having a fixed annuity in your retirement portfolio, it leaves your retirement assets available for other key retirement risks, such as long-term care. So I'm a firm believer that you should have a long-term care policy to help cover your long-term care needs and not rely on your retirement assets to fulfill those needs. And I will do a video soon about a fixed indexed annuity with a long-term care rider. So be on the lookout for that video. If you're interested in obtaining financial security, certainty, and happiness in your retirement, of which a fixed annuity can provide you, click the link below to apply to become my client. Also, if you enjoyed this video, be sure to give me a thumbs up, subscribe to my YouTube channel, and share it with your family and friends. Thank you for watching. Let's get the conversation started on how you can live your best retirement while not outliving your money.